Welcome back to ProfitPowerhouse. Today, we're diving into a high-volatility stock that's kept investors on edge: Palantir Technologies. With prices pushing toward record levels, investors everywhere are asking, should you take your profits now or double down on the momentum? Joining us is Chris Merrick from MarketBeat to unpack the latest headlines, financials, and strategies surrounding Palantir's wild ride. Chris, great to have you back. Let's kick off with the controversy that's rocked Palantir recently. What went down? Thanks. Palantir was recently thrust into the spotlight after news broke that they were tentatively awarded contracts for the proposed Golden Dome project. This project, if greenlit, would make Palantir a major player in a highly sensitive data operation, and that set off alarm bells among civil liberty groups. Privacy advocates are concerned about what data the government could collect with Palantir's tech. In response, CEO Alex Karp hit CNBC with a passionate defense of the company's ethics and oversight. While that stirred some backlash, the stock barely flinched. In fact, it bounced back fast. Despite the heat, the stock is still climbing. Why does Palantir keep defying expectations? It's a mix of factors. First, Palantir thrives during geopolitical uncertainty. Their software is built for defense, intelligence, and large-scale analysis. With the current global instability, demand for their tools is rising. Second, their investor base is incredibly loyal. Retail investors love Palantir not just for its government deals, but for its commercial growth too. New business contracts seem to drop almost weekly, feeding the narrative that Palantir is just getting started. But here's the tough part: financials. For many, Palantir looks overvalued. What do you see when you break down the numbers? You're right. By traditional metrics, E ratio, P, S ratio, P, B ratio, Palantir is not cheap. It has surged over the last year, making many traders think it's due for a correction. But deciding what to do next depends on your investment strategy. Is this a short-term gain or a long-term bet on innovation? That brings us to institutional movement. There was big buying in Q1, but now names like Druckenmiller and Cathie are trimming their stakes. What should investors make of that? It comes down to goals. If you're a trader and your investment has doubled, locking in gains makes sense. Nobody loses by securing profits. However, long-term investors, especially those who got in under $10, face a tough decision. Selling now could mean missing out on more upside. Many are waiting for a 2025% dip to reinvest or add. So, what's a smart way for long-term holders to manage their positions? A strong move is to de-risk. Say you put in $2,000 early on. Sell $2,000 worth now, recover your initial capital, and let the rest ride. That way, you protect your money and stay exposed to future gains. Ultimately, it comes down to conviction. Some analysts still say Palantir is overvalued, but others project $3,035 targets in the next 12-18 months. If you believe in the mission and the tech, you may want to hold or add strategically. Let's talk about that tech. What gives Palantir a competitive edge in the crowded AI space? The star is their artificial intelligence platform AIP, powered by something called an ontology. This enables organizations to link all their data sources and AI models into one seamless operating system. In plain English, it doesn't just give you AI-generated text, it helps you do things with your data, make decisions, operate efficiently. That's why major clients like BP say they're sticking with Palantir long-term. Unlike other AI players, Palantir doesn't compete with language models, it supports them. That's a rare and valuable position to be in. Are we seeing Wall Street warm up to that value proposition? Definitely. While the company was once snubbed by analysts and institutions, after going public via direct listing, many are now reversing course. Bearish forecasts used to put the stock in the single digits. Now, $18 is seen as a floor, not a ceiling. The narrative has shifted. Analysts are starting to recognize that Palantir's long-term utility is impossible to ignore. Still, this is a politically sensitive stock. Could future government ties or public outrage derail it? It's possible, but less likely now. Unlike Tesla, which lives in the court of public opinion, Palantir is increasingly viewed as a utility, a necessary tool for security and data coordination. People are realizing that it's not about being a hero or villain. Palantir has the best tools for the job. That credibility is outweighing the no's. So here is the takeaway. Palantir is volatile, politically entangled, and financially unconventional. But it also may be one of the most essential and unique tech stocks on the market today. Do you think Palantir is just beginning to shine, or is it time to take profits? Drop your thoughts in the comments, and if you found this breakdown helpful, be sure to like this video, subscribe to Profit Powerhouse, and hit that notification bell so you never miss a beat in the market.